All right, so now we're going to work through everybody's favorite part. We're going to go through some actual journal entry exercises. I'm sure by this point in your academic careers with accounting, you are not anywhere even close to being sick of doing journal entries. So we're going to do a few more in this class. So what you're going to see here is just a simple fact pattern. You've seen these a million times at this point in your academic career. So what we're going to do is we're going to go through and we're going to journalize each one of these transactions. Okay, so you can see we've got 6 of them here. There will be a corresponding number of journal entries, and we will go through each one of those. So number 1, so the budget was formally adopted. So this means that the City Council has voted on the budget. It's been approved. What did I say? When the budget's approved, we record it. Now remember, in the budget, when we're recording the budget, it's all estimated. So all of these are estimated numbers. We may have to change them up at a later date. So the budget was formally adopted. They provided estimated revenues to us of $1,070,000 and estimated appropriation. Well, it doesn't say estimated appropriations, but just know that when you're creating your budgets, those appropriations are estimated. So appropriations of $996,000. So in journal entry 1, we are going to debit estimated revenues control. Remember, this is the opposite. Typically, you would think that you would want to credit a revenue, but since we're doing the budget and we want to be able to look at that comparison later on and get the variance between what we estimated and what we actually got, then we are going to debit the revenues control. We will do that for $1,070,000. And then we will credit the appropriations control. Again, appropriations kind of like an expense, but these are estimated, so we're going to do the opposite. We're going to credit those for $996,000. Now, every good accountant knows that the first rule of accounting, whether that's governmental or for profit, is that your debits must equal your credits. We can see here that they do not, in fact, equal. There is no equity here. So what we need to bring in is that budgetary fund balance account. That is kind of our equity account here. Since our revenues exceeded our appropriations, we are going to credit that for the difference between the two. In this case, it's $74,000. So journal entry 2, revenues were received all in cash. Thankfully, that is a very easy journal entry to make. And they told us that we received an amount of $1,010,000. So we are simply going to debit cash for that amount. And we're going to credit our revenues control account for that amount. We are recognizing that revenue. It's revenue we can actually recognize right now. Pretty simple journal entry. Should be one that you were comfortable with at this point. Journal entry 3, purchase orders were issued in the amount of $479,000. Now, this is a new set of terms I want you guys to be looking for. These are new key terms that should trigger the names of accounts and accounts that you should be using in your brain moving forward. When you see purchase orders issued, that means we are going to be using an encumbrance control account. So we are going to debit that encumbrance control account for $479,000. That is the estimated cost of those purchases. So we're going to debit that. Remember, this is just kind of a reminder account that we need to have this money set aside. Where are we going to set that aside? Well, in our budgetary fund balance account in a subsidiary, the reserved for encumbrances in the same amount. This account tells us we have earmarked this money to be used for this specific purpose. It is being encumbered to make the purchase for 4 vehicles or whatever the case may be. So, in journal entry 4 here, the first journal entry is going to be that of that $479,000 that we've encumbered, $470,500 of it was filled. So that is the estimated amount. So what do we do with encumbrances? Well, once we've filled them, we reverse that portion out, right? So it's telling us we need to reverse of that $479,000 that we encumbered. We need to unencumber $470,500 of that. So we're going to do the exact same journal entry, just the opposite. We are going to debit our budgetary fund balance reserved for encumbrance for the estimated amount that was filled, $470,500, and we're going to credit encumbrances control for that same amount. We are now taking that paperweight off that portion of the money. Now, it does tell us some additional information here, 2 things that you need to be aware of. The actual invoice amount was $470,000, and we have not paid it yet. So that tells us two key pieces of information. One, we have an actual amount of $470,000, an actual expenditure of $470,000, and we didn't use cash. We have used a payable account. So we're just going to fill in that portion of it. So expenditures control, your expense, it's a debit. It's going to be an increase of $470,000. Now, we used accounts payable here. Okay, we didn't use cash. You could have used cash, but they told us not yet paid, which means we've used a payable account. So we're going to create that liability for the same amount that we have increased our expense. Now, in journal entry 6 here, we see that the expenditures for payroll not encumbered, it tells us it's not encumbered, amounted to $510,000, not yet paid. So again, it's not encumbered, so we know it's going to be an expenditure, and it's not yet paid, so we know we're going to use like a wages payable account. In this instance, we're actually just going to use accounts payable, just so we can do this next journal entry pretty easily just on 2 lines, right? So now in journal entry number 7, they tell us, hey, the amounts from journal entries D and E of the actual $470,000 invoice and the $510,000 of payroll, we paid those, and we paid them in cash. So we are going to debit accounts payable, which, as you guys are familiar with at this point, is a decrease to the liability account, and we are going to credit cash, which is a decrease to that asset account of $980,000. So moving on to the next one, what I want you to do to start with before you even start is write out the totals for each section of this problem. It's going to be helpful for you as you work through the journal entries. They're going to require that you, a lot of times in your homework, they're going to require you to put in the control amount, so that general ledger amount, as well as the subsidiary accounts. So it's going to help you fill those out a little quicker. So we can see here that estimated revenues, these are legally budgeted, meaning, hey, we've approved this budget. We've now recorded the budget, is now legally binding. You're going to have to do some work to make any revisions to that. We see that those estimated revenues are $12,480,000. Appropriations are $10,570,000. And the actual revenues that we received, that we actually received in cash, it tells us here it's cash, is $12,685,000. Now we're going to look at the encumbrance accounts. This is going to include salaries and other types of recurring items. It gives us our estimated here on the left, and it gives us a total of $10,810,000 in estimated encumbrances. And then the goods and services that we received, we see that we estimated to receive $10,810,000 in goods and services, but what we actually received was $10,796,000 in goods and services. So there is a difference there. Now, when we get to those journal entries, we'll walk through those again, but recall that you're going to have to reverse that encumbrance at the full estimated total, and then we're going to record that financial activity at the actual total. Next, we have budget revisions. In this case, we're going to increase appropriations in two different categories, the general government and the cultural and recreational, and those are going to total $250,000 of appropriations that we're going to need to increase with this budget revision. And then finally, we're going to see the beginning fund balance on January 7th or on January 1st was $753,000. There's no encumbrances outstanding. Encumbrances are really fun. We'll get into these later on, but if you have outstanding encumbrances, you have to reverse them and then immediately redo them at the beginning of the next period, but we'll get into that later. So what we're going to do with this set of facts is we're going to record transactions, and then we are going to prepare a comparison schedule, a budgetary comparison schedule for this general fund that we are looking at. So what we're going to do is we're going to look through each one of these journal entries, and you can tell which one we're looking at based on up here, the blue, or this tab right here. This is very much, it's going to be very similar to what your actual homework is going to look like going through Connect when you're doing these, so be prepared for that. You will notice here, and I will mention this, I will go over this for the first couple, but here we're going to have, here we're going to have our general ledger, right? This is going to be our general journal. So it's going to be the control accounts. So those revenue control accounts. And then you're going to have your subsidiary ledger. These are not a separate journal entry. These subsidiary ledgers, these are just additional information, right? So you're going to have all of those breakouts that we saw in that first list, the bullet point 1 for this fact pattern. So just be familiar with that. Be ready to do that in your homework, probably on your quiz as well. So let's get started with estimated revenues. So we know that we had estimated revenues of $12,480,000. We can look back at our fact pattern and see that. This is why it was helpful to fill that total in at the very beginning instead of right now. Again, notice this is your control account. This is your general ledger account. So we have increased our estimated revenues with the debit. We are going to increase our budgetary fund balance with a credit. So essentially that budgetary fund balance is our equity account, right? It's our revenues over our expenses. So our estimated revenues in this case over our appropriations. So right now we don't have any appropriations, it appears, so we're going to immediately increase our budgetary fund balance by $12,480,000. Then we're going to go through and we are going to put each of those sub-ledger accounts in here and see that the $12,480,000 matches what our estimated revenue control account total matches. So we will do that for each one of these different journal entries, right? So we'll do it for appropriations next, and we'll do general journal and subsidiary journal, subsidiary ledger for each one of these. So moving on to appropriations, again, you're just going to take the information that you had in your fact pattern. So what are we doing with appropriations? Well, they're kind of like estimated expenses. We have authorized that we're going to spend this much. We can spend up to this much amount. We have appropriated this much of our funds to be able to spend on whatever purpose it is that we're spending it on. So we're going to debit our budgetary fund balance at this point. This is going to be a decrease to that account because these are kind of like expenses. And what is budgetary fund balance if not kind of the equity account that just holds the excess of our estimated revenues over our appropriations, right? So then we're going to credit appropriations control. Again, kind of like an expense, but since this is the budget, we're going to do the opposite so that later on in the future, when we get to that last tab, that budgeted comparison schedule, we can make a comparison between what did we estimate and what did we actually spend. Did we stay within our legally binding estimated appropriations or estimated revenues? So it's going to be the same amount. Again, here we will see that we will enter these into the subledger under each of their separate categories. Notice that these are not separate journal entries. You don't have an appropriations control credit and then a whole bunch of other credits. You throw your entire equation out of whack that way. You throw the journal entry out of whack that way. These are just simply more detailed information. This is just a subsidiary ledger, a subledger. You guys, I would imagine, are familiar with subledgers at this point. So moving on to the actual revenues. So this is our financial activity, right? This is what's actually happened to us as far as revenues received, cash received. So we're going to debit cash because that's what we received. It told us in the fact pattern that we received $12,685,000 in cash. And we're going to credit revenues control. Again, this is a control account, a general ledger level account. We are simply recognizing that revenue right now. Then we'll go through and you can list out all of the subsidiary accounts here. Again, they're all credits because they are actual revenues. They're actual financial activity revenues that we're recognizing. So we're going to credit those. Again, just one more time for those in the back. These are not additional journal entries, right? These are just simply this revenues control account blown up and broken down into its component pieces. That's all the subsidiary ledger is. Okay. So moving on to encumbrances, these are some of my favorite journal entries because they are kind of wacky and crazy, and you don't see them typically, well, you don't see them at all in for-profit accounting. It's kind of what sets us apart from for-profit accounting, something new, something fun. So we know that we encumbered $10,810,000 of funds, of monies, when we issued those purchase orders. Okay. So we debited encumbrances control to remind ourselves that, hey, this money's sitting here. This money, this stack of cash has a paperweight on it. We can't use it for anything but this. It's been encumbered. And then we're going to credit that budgetary fund balance reserved for encumbrances account. It's kind of almost like a sub account for the budgetary fund balance. It's just earmarking that $10,810,000 and saying, hey, this is earmarked. This is saved specifically for those encumbered funds. And then again, this is just the subsidiary ledger of this. We see we've encumbered some for general government, some for culture, some for health and welfare. Total subsidiary ledger, $10,810,000. So this is our goods and services estimated. So this is when we received those goods and services. We're going to back out the estimated portion of that. So we are going to reverse that $10,810,000. Okay, so again, this is just reversing that encumbrance. With that, we talked about this. When you actually receive the goods and services, you reverse out at the estimated cost. You have to get all of that money unencumbered. And that's all you're doing in this situation, is you are reversing that original encumbrance control journal entry. So here we're going to look at what we actually paid. Here's the financial activity, right? This is what's going to go to the financial statements. This is your actual factual activity. This is the cash or the accounts payable that you actually used, right? So here we can see we're going to debit and expenditures control for the amount that we actually spent, $10,796,000, and we are going to credit cash for that same amount. Okay, so this is a very simple cash for an expense. Debit the expense, expenditures, credit the cash, cash. And here, they'll break it down further into the subledgers. How much did we spend in each one of those categories? And finally, we've got that budget revision, right? Recall that we said we needed to increase appropriations in two different categories, right? So how do we do that? Well, if we want to increase appropriations, then we're going to need to debit that fund balance, that budgetary fund balance, to decrease it because, again, just as a reminder, that budgetary fund balance is kind of your equity account. It is your estimated revenues in excess of your appropriations. So if you need to increase appropriations, you are going to decrease your budgetary fund balance, and we do that through a debit. So we know that we have to increase our appropriations by $250,000. So we're going to debit our budgetary fund balance by $250,000. We are going to credit our appropriations control for $250,000. That is increasing it. And then we will see the subledger here for those general government and culture and recreation. So as far as chapter 3 goes, we got one more video. It won't be too long. I know I'm killing you guys. I apologize, but we do need to go through this budgetary comparison schedule.